anywhere with you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is on your shoulders, and you feel like falling over. Just let me in your head, so I can be there for you, there for you. The night is young, won't you sing for me? Won't you sing for me? Till we fall asleep. The night is young, won't you sing for me? Won't you sing for me? Till we fall asleep. The night is young, won't you sing for me? Won't you sing for me?
Well, we've got the master of the VC Masters and all along those lines, Salman Usser in the house, and I'm going to find out what he's got going on and all in that space, because I know he's got some amazing things that are taking place, because he's got a lot of credentials in this field, having been a faculty member over at Duke University and also an investor with 200 plus investments. I also understand he's a superhero trainer and OG, and I definitely love OGs and all along those lines. And I also understand, which I did not know, maybe y'all knew this, but apparently he's a comedian as well. So I want to find out what this is all about, but I'm going to bring him in and see what we've got going on in the VC world. But when I saw that bio, I'm going like, wait a minute, Salman is a comedian? Who knew?
Hi, Mark. Well, I'll try not to be funny.
Okay. Well, I'm going to turn it over to you. I do have some questions once we get going, but I'll turn it over to you and you can give some updates and everything. But we do have a major question that I'll be coming your way with in a little bit, but I'll turn it over to you for your initial conversation, and then I'll come in with the question shortly.
Well, it is a great and interesting time to be alive. There are things that are going on in the investment markets that are really unprecedented, starting with the tariff announcements and how that impacted IPOs. Then before that, we had inflation, which we are still fighting. And then before that, COVID hit. And that has all kind of come like one after the other. And, if you really think about it, markets like 10, 20 years ago would have taken years to recover from each one of these, or maybe even decades. But we are now experiencing these events in sequence, and we are recovering fairly quickly. So, Mark, what questions do you have for me?
Oh, no, second, no problem whatsoever. One of the things that I know is going on is that whole notion of IPOs, and a lot of people that are into investments. And I actually have some friends that are into various kinds of investments. They are aware of IPOs and all in that space, but it doesn't seem like they're doing as well as they were expected to do and all in that space. So it seems like they are in a deep freeze or somewhat of a freeze. So what's going on with the IPO market, and can we expect in that area, and what can we expect to make these IPOs better? And for those that are watching that don't know IPOs, maybe you can explain a little bit about what exactly an IPO is.
Yeah. So IPO is an acronym for initial public offering. And what happens is that a company that starts as a small company and it grows and grows and grows, it runs out of kind of like a market that it starts with a private market, and most of the investors are private. But in order for it to raise big money and for it to pay back the original investors, it goes public, or it has an initial public offering. So, for example, if you think about Apple started, as a small company with Steve Jobs, Steve Wozniak, and a few other people. They took some investments and they took some more investments, and then grew and then grew and then grew. And then they got listed on a public market so that you and I can buy their shares. And when you and I buy their shares, basically they're open to the entire public. And when they're open to the entire public, a lot more people can invest in it, which allows them to sell more shares. And also some of the original investors get paid back during this time. In addition to that, the early employees and the founders, they have some shares in the company as well. They can also sell their shares and get cash for that. So that's basically what an IPO, or initial public offering, or a public offering is. Typically, a company that goes IPO has an investment banker or something like that helps them price and sell the stock even before it's listed. But there are some that go IPO by direct listing, which is basically they just get listed directly, and then they just advertise and they reach out to people and they invest in them directly. So that's basically what IPO is. Does that make sense? And before I go into like what's happening in the IPO market.
That makes a lot of sense. And I know there are various IPOs, and one of those IPOs I understand is wondering how it's going to impact because of the tariffs. So when I think of IPOs, I definitely think of certain companies, and one of those companies that I personally think about, and apparently they're on the news today, is Walmart, because Walmart had its initial IPO back in October of 1970, with the stock initially priced at $16.50 per share. And I don't know what it is right now, but I do know that Walmart is a publicly traded company, and that it had its initial public offering way back in the early 70s and everything like that. I don't know your thoughts around their notion of as an IPO, but I do know that in the past they have been an IPO.
Yeah, so they IPO'd a long time ago. Actually, you know the date. I didn't even know the date. It's decades ago, before I was even investing. I was too young to have any money at that time. I was more of somebody that would buy some cheap stuff at Walmart as opposed to buy Walmart stock.
Right.
So Walmart is impacted by tariffs because a number of its products are made in China and overseas. And whenever those products enter into the United States, if there are tariffs on those, that would make the cost basis for Walmart higher than what it is, and maybe even higher than what their current sale price is. So let's say Walmart is acquiring something for $10 and it's selling it for $20. And I'm just making the math easier. The first question comes up is that, oh, wow, they are doubling the price. And, sometimes they would be doubling the price. Sometimes they would be going more. Sometimes they would be going a little bit less. But generally, the retailers take a large chunk of it and then use that large chunk to pay rent, to pay for software, to pay for employees, and so on and so forth. Now, what happens is that a $10 cost basis, if there has 100% tariff, it becomes $20. And now Walmart, if they sell that product, they won't make any profit, and they wouldn't have any money, in fact, to pay for their rent, their employees, and so on, pay their employees, etc. So that is actually one of the reasons that a lot of IPOs that were planned for this year have been paused. So, for example, Klarna is an IPO that I'm following because Klarna was interested. Is just an interesting company. Actually, I can't say complete that sentence because I just realized that's under NDA. So Klarna was an IPO that I was following very closely because I would be interested in it going IPO because I can benefit from it. Let's just put it that way.
Yes.
But when the tariffs hit and the stock market kind of went down, they paused their plans for IPO. They still are going to go IPO at some point in time, but they delayed their IPO. And that's happened with a number of companies. Major reason that companies do that is pause their IPOs under volatile markets is that when they go IPO, let's say at $50 a share, they want their price to go up, not down. Because if they go IPO and they start going down to 30, 20, 10, that becomes an appearance of a damaged company. And it's very difficult for them to recover. So, for example, there was one company called Amplitude, which I was an initial investor in. My cost basis on that company was about 37 cents per share. That company went IPO via direct listing at about $50 per share. It went as high as 70 or 80, and then inflation hit, and it went down to about 10. And it is still around 10, and it's very difficult for it to recover now because it doesn't have the momentum and so on. And so we talked about tariffs affecting the price of the stock market. Inflation also impacted the price of stocks in the market. So that's another reason that the IPOs during inflation time were delayed. And then before that, COVID also had the similar impact. But all these companies, when they go IPO, they want to have a positive momentum. So they want to go IPO in a market that doesn't have the volatility or doesn't have the risk of their stock going down.
That makes sense. Hey, Dr. Uzzer, just really quickly in that same realm, because when I was studying Walmart and looking at a couple of things, another thing that caught me off guard, I don't know how it's impacting the IPOs, but you might have some thoughts around it, is apparently a number of these IPO companies are looking at AI and how AI is going to impact them. Because I'm seeing that they're even seeing that, say, for example, in Walmart, that they're going to be not just targeting the individual, but also targeting the AI shopper, because a number of these people are also having AI agents that are literally doing the shopping for you. And I'm guessing that that could impact how the IPOs do and everything. So just wondering what kind of impact will AI have on these IPOs, whether it's a store bought one like Walmart is, or whether it's some of the other ones as well.
Yeah, so I don't know, and anybody who claims to know is lying, because we are still in the early innings of what AI's impact on our lives is going to be, on our finances is going to be, on our jobs is going to be. But there are a number of things that changed in the last couple of years with AI. AI became a lot more autonomous than it was before.
Right.
So what is AI? So AI is a general term that we use that whenever that instead of specifying a computer to do a certain thing, we give it some training data, and the computer then trains on that data and makes its own decisions. So, a simplest form of AI is autocomplete. So when you are like typing these days, for example, in most editors, you type in a few words, or you're searching something, and it starts completing your word. What it is doing is it is learning from all the other combinations before. So all the word combinations are fed into it. And when you type TH, it says that it is likely the or that. And depending on what you are typing and what the other typing it has been trained on, it would try to autocomplete that to the or that. Sentence completion works the same way. For example, if I type the, and usually I type another word, let's say IPO after that, then frequently, then my autocomplete would start saying the IPO. So that's basically very simplest form of AI. And some people don't call it AI anymore, because AI can now predict a lot more. You mentioned the term AI agent. So AI agent, basically the way it works is it's like an agent. It's like a human agent. Like when you call somebody up to find out who charged on your credit card and why this charge is there and so on, or you call a restaurant up and make a reservation in that restaurant. Usually a human being answers the phone, and that human being is sometimes associated with the word agent or representative. AI agent basically says when you call somebody up, instead of talking to a human being, you will talk to an AI agent. This AI agent would now be trained on all the things that the human beings say or human agents say to you when you call and, let's say, make a reservation at a restaurant.
Right.
And they also would have access to databases in terms of what tables are available, how many people they can accommodate at a certain time, in order to have to finalize the reservation and put it in the system. So an AI agent can do all that without an intervention of a human. What AI agent needs is training data to tell it what things to say, and also structured data that is in the databases, such as the availability of tables and stuff. Now, obviously, the first thing that comes to mind is that if you can call an AI agent to make a restaurant reservation, then you don't really need to talk to a human being. So the restaurant can now cut its staff, which can lead to some unemployment. And already a number of companies are cutting huge portions of their staff because of that. So, the company that we just mentioned, Klarna, cut like a large percentage of their staff because now they can have AI doing those work.
Yeah, that makes sense. The other thing that I saw in the IPO field, and I don't know your thoughts around it, and I don't know whether you can talk about it, because I do know about some of those protection things and all along those lines. But there is a company that is in the crypto space and everything, but I did see a lot of news about it because it's got a initial public offering, that being eToro, and apparently it's a stock and crypto trading site, and apparently they're priced at some $52 per share ahead of their debut and everything. So is that a form of an IPO that you would recommend for folks, or is that something that you can even say about one way or the other? But I do see that it looks like they jumped 30% on their debut after their upsize, and I'm not even sure what an upsize IPO is, so you might have to explain what upsize is as well. But I did see that that was something that they were reporting in some of the financial media.
Yeah, so I don't specialize in really publicly traded companies because at that time the pricing is very much determined by what the sentiments are.
Right.
And one of the reasons eToro has been in the news is that the pricing of their IPO was something that was much higher than what was expected some time ago. And there's another company called Chia that is also going to IPO. So one of the things that is now changing is that these blockchain companies or crypto companies are now going public. It used to be that they would not be traded on the public markets, and there was a lot of investor sentiment that was nervous about them. So a lot of these things now have become more common you'll see this more common, that crypto companies would be traded, starting with eToro, and then you'll see Chia soon. I think Chia has filed for their S1, which is like the step to go IPO. And
yeah, along those same lines, because I know a lot of people, I used to have one of these that I mentioned, but a lot of people have different cash services and the cash financial services like Cash App and PayPal. And I just saw that apparently Chime, which is a fintech company, and I've had some friends that have tried to get me to get Chime, which I have not gotten any of anything, but it looks like it is positioning itself to go IPO as well, because apparently on Tuesday of this past week, they filed to go public on the NASDAQ, and it looks like they're going to be filing under the ticker symbol Chime, CHYM. So they are a technology company, not a bank, is what the company said in its prospectus, noting that it is not a member of the U.S. Federal Deposit Insurance Company, but still the company cited Bank of America, Capital One, Citibank, JP Morgan Chase, PNC Bank, and Wells Fargo as competitors. So they are definitely sound like they're in the banking field, even though they say they're not a bank.
Yeah, so definitely. So there's this like whole bunch of fintech companies now that can be used as a bank, but they're not licensed to be a bank.
Right.
Because banking involves a different classification and so on. And obviously there is a little bit more security about them being FDIC insured, etc. As far as all these companies are concerned, if you really kind of look at the number of companies that are going IPO, that's still very low compared to what it used to be like. And there are still a lot of companies that are nervous. And what they're doing is that they are waiting until the right time, and they're watching very closely what happens to eToro, Chime, Chia, and other companies that are going IPO this year or planning to go IPO this year. I can't predict if they will actually go IPO or not. Yeah. Like Klarna was planning, but they have now delayed their plans. So a lot of companies are watching it, and meanwhile, what's happening is that the early investors in these companies, investors that have been in these companies 10, 12 years, in terms of duration, they need liquidity. And VC companies, typically in America, that were started like around 10, 20, 12 years ago, had a 10 to 12 year lifetime. Typically, the contracts were written such that a VC fund would last for 10 years, but it can have 2-year extension or 2 1-year extensions. So these VC funds have to liquidate. They have to sell their shares in order to return the money back to their investors. Because they have,
I'm sorry. As you were saying that, and I was thinking about something, you don't know this about me, but I've got family members that are into sports, and I'm somewhat into sports as well and everything. Dad used to play tennis way back when and all along those lines. And I just realized that sometimes IPOs are used as a method to pay down debt and everything like that, because it looks like that's what happened with Wilson Tennis, which is the tennis racket and everything. They had gotten into a major debt, and then they went earlier this year into the IPO in order as a way to pay off their debt and everything, or is that a misread on my part, or am I reading this correctly? That some of these companies, including some in the sports field, are using the IPO as a way to alleviate some financial debts that they're in.
Yeah, so I think to alleviate the investors with including equity and debt investors is is accurate. Generally, it would be a distressed or slightly distressed company that would go IPO to relieve debt,
Right.
and their IPO would not be quite priced as high as a company that would be offering the IPO not to relieve debt so much, but to pay back the original investors. And the reason is that as an investor, you want your investment to be used in the growth of the company, not to pay down debt, because debt is not something that can grow the company. So if your money is used to grow the company, let's say, you get $10 million or $100 million or $1 billion into a company, that company can grow if it is not used to pay down the debt. But if all that amount is used to pay down the debt, then the company becomes a little bit stagnant. It can't really grow that much. But coming back to kind of like the situation, the challenge is that because of the IPO market being delayed, frozen, or whatever you want to call it, or throttled, a lot of private investors are selling their shares in the secondary market. A secondary market is when I buy shares from an existing investor, as opposed to I buy shares from the company. So the money goes to pay an existing investor. It doesn't go into the company. When I buy shares from a company, that money goes into that company. So because a lot of these funds are near the end of their life and they are selling, and there are more sellers in the market, that has pushed down the price of the shares in the secondary market. And that means I can get better deals, like 40% off, instead of paying the full price that I would if I invest directly in the company.
Well, so should you get, as an investor and or even a venture person and everything, should you get involved in the IPO in the early stages of the IPO or in the latter stages? What do you think is the better strategy? Because I think
so the money that public company makes on the average is smaller than the private companies make.
Gotcha.
So I do not, again, it depends on your, investment thesis and stuff, but my investment thesis is not to get involved in public companies at all. I'm a seller in the IPO, not a buyer.
Gotcha.
Because generally, if I invest in a private company and I make good decisions, I can get a lot more money for that.
When do you think, or what do you, as an IPO investor, because that's what you said you're doing and everything, when do you think a company should look at being an IPO? Because can a small, and I don't know the answer to this, can a small storefront company that say has got eventually 5 or 6 businesses, like they start off as one restaurant and then they grow to be a franchise, for lack of a better term, can they then eventually become an IPO, or do they have to be the size of, say, a Walmart or a Wilson Tennis that's got millions and billions of dollars in their fund and everything? So is an IPO something that a small business can even consider going into? I guess is the question I'm asking.
Yeah, so they are kind of like reverse IPOs, and there are some kind of tricks that you can use for a small business to go IPO. But generally, you need a few $100 million in annual revenues in order to go IPO. And that's going to be very difficult for a small restaurant chain to get. But obviously, a larger restaurant chain, like for example, Yum Brands, which owns KFC, Taco Bell, and Pizza Hut, that went IPO. And just to clarify, I'm not an IPO investor. I'm a pre-IPO investor. I buy shares in companies that have not yet gone IPO. I usually get 40% discount of the fair market value. And these companies, when they go IPO, first thing that I get is an instant reward on the 40% discount. And then usually these companies, let's say, are growing at 30, 40, 50% year over year. So I gain in that. So you can almost think that my method here is that I get a 40% discount just to get it started. And then the company that I'm investing in, I would like it to grow, let's say 40% per year. So after a few years, I am getting much more return on my investment than I would get, let's say, investing in a company that is already on the stock exchange, which is basically after IPO. On the average, S&P gives about 10% annual return, which is much lower than what I would like to do with my money.
Yeah, I was just curious because, like I said, I eat out way too much. I know that you probably do the same, being a business person and an executive. But one of the places that I eat at is Chipotle, which is the Mexican restaurant. And I just saw this article that said that if you had invested $10,000 in Chipotle's IPO, and this was in 2021, right at the term of the right around the time of the pandemic, they were saying that it went IPO in early 2006, and your shares would be worth a little more than $640,000 in 2021. So it sounds like you would have made, what's that, 64 times what you had invested in everything along those lines. Because it did sound like the initial price was $22 per share, and that's when the offering took place almost 20 years ago, back in January of 2006. I was just curious as to what that particular company does, because I know that I probably eat there way too much. So I'll probably help it with those IPO investors.
Yeah, you are definitely helping with the Chipotle stock. And actually just it takes quite a lot of marks to push the stock up like that. And Chipotle is a great story. And there is Facebook, Google, Apple, all these are great stories. What people miss out sometimes is that for each one of these stories, there are several stories that didn't do quite well, and they didn't quite grow. And that's why I come back to kind of like S&P 500, which is like the 500 top companies or biggest companies, and that they generally, on the average, give about 10% return. Now, if you had the foresight to buy only companies that would give you return that Chipotle or Google or Facebook gave, that would be great, right? You would love that. But unfortunately, it's very hard to predict that, how Chipotle is going to do. There are lots of restaurants, for example, Red Lobster and Darden, restaurants. That was the publicly traded company that owned Red Lobster, and I think a few other chains as well. They didn't do too well. And who would have thought that they would really suffer that back? The Red Lobster in Durham, for example, that I used to go to, is closed. And that's, by the way, another interesting story, which is that there was a shrimp. There's a company that bought it that used to sell shrimp, and they basically flooded Red Lobster with their all-you-can-eat shrimp that Red Lobster was paying them for, and the shrimp company was making profit. So they drained Red Lobster in order to benefit their shrimp company, and really drove a lot of Red Lobsters out of business.
Yeah, that definitely has happened, because I remember the Red Lobster here and one that was in Raleigh as well. I know we're winding down, but this is an interesting story that a lot of people will find interesting, because this particular product was very popular among our young people and everything. But I just happened to look it up and I realized what they were talking about. But apparently, coming back to 2006, Crocs, which is those funny looking shoes and everything, had an IPO on February 8th. And its shares opened on the NASDAQ at a price of $21. And apparently they raised a total of $208 million. I was never a big fan of those particular shoes, because they always looked a little bit odd and all along those lines. But I know a lot of teenagers and a lot of others like those kind of shoes and everything. But apparently it raised a pretty decent amount of money in the whole IPO field and everything. I don't know if that would have been invested in the funny looking shoes, because that's what I always think of Crocs as.
Yeah, so I mean, a lot of public investing can be very. So the major difference between public companies is they have to report quarterly, or they not have to, but they are expected to report all their results quarterly, and that sometimes changes the long-term vision. So the private company, and like Stripe is a company that's staying private for a long time, because they want to really invest in their long-term vision. So that's basically, So I mean, it's very difficult to predict these things, especially when companies go public. In my opinion, it's actually easier to predict them when they're private because you have a smaller staff. You can check them out. You can see how they're doing. They have a focus, and you can predict them. You can just understand that a little bit better than you can sometimes in public companies.
Do you think that there's any, and I don't know if you can report on this because I don't want to get you in trouble on the legal standpoint and everything, but is there any companies that people should be possibly looking at in the IPO? And if you can't say a specific company, specific industries, because I do know that sometimes if you can't say a specific company, you can say specific industries that folks might want to look at in the IPO space. And like I said, I do understand that there are rules and regulations even in the investment space. So I definitely want to make sure that we keep you safe and everything along those lines.
Definitely. So I can tell you, I can't answer your question directly, but I can tell you the two companies that I am increasing my stake are Questkey and Khoros. Questkey is a fintech company that provides credit worthiness and credit risk for consumers. And Khoros is a healthy lighting company that tunes the light based on what your circadian rhythm is and what is best for your health.
Gotcha. That makes sense. Was because my one of my classmates was the founder of this company, and I think they changed their name. But is Cree an IPO or is Cree not an IPO? Because Cree was that lighting company that did.
There were an IPO at some point in time, but I don't know if they went private. So that happens sometimes. A company that goes IPO sometimes goes private again.
Gotcha. And I'm not sure what they did either, because I think Cree may be Wolfspeed now, because I know they changed their names and I can't remember what it is now. But I do know that one of the founders is one of my fellow Marquette graduates, that being Chuck Sobata. So he was one of the executives at that company, and I don't even know if he's still there and everything. But
Cree is a great local company, by the way, whether it is IPO or private.
Yeah,
I love Cree. Yeah.
Cree is wonderful. Well, this has been a fun conversation. Like I said, I had no idea what to expect from you and everything like that. Nick just threw me into the fire branch, but I'm a trained journalist, so I can ask all kinds of questions to all kinds of people and everything along those lines. So I did learn quite a bit, and hopefully I might get this opportunity again. But it's always fun to learn from you and to have this opportunity when Nick is busy and isn't even to be in the driver's seat the way that he is. And as a pension attorney and one of the founders of the network, I know he knows a lot more in this field than I do, but I am a trained journalist, so I know how to ask questions and get the answers from the experts and all along those lines. So definitely
it was a pleasure talking to you.
Always a pleasure. So get ready to get out with that same intro that we started with, but I will catch you later.
Take care. Bye-bye.
Bye.
I go anywhere with you, 'cause you fill my mind, or you fill my mind. We could build a dream, start up something new, and the world is on your shoulders, and you feel like falling over. Just let me in your head.